Have you ever felt that you're giving too much of your hard-earned money to the government? Today, we'll look at 10 legal ways to save money. If you're all about saving money and living frugally, hit the like button and subscribe for more tips. 1. Max out retirement accounts. Contributing to retirement accounts like 401(k)s or IRAs can significantly reduce taxable income, with the maximum contribution in 2023 being $6,500. Smart planning, setting achievable goals, and recognizing boundaries can maximize Roth IRA benefits. 2. Use health savings accounts, HSAs. Health savings accounts, HSAs, are tax-efficient tools for individuals with high-deductible health plans. They offer a triple tax advantage: deductible contributions, tax-free growth, and tax-free withdrawals for medical expenses. This makes HSAs an essential asset for healthcare and tax-saving strategies. 3. Invest in real estate. Real estate ownership offers numerous tax advantages, such as deducting mortgage interest, property taxes, and home improvement costs. Real estate investors can benefit from depreciation, which offsets rental income. Homeowners can also qualify for capital gains exclusions when selling their primary residence, making it a powerful tool for minimizing or eliminating taxes. 4. Take advantage of tax credits. Tax credits are direct reductions of tax liability, offering savings on total taxes owed. They lower the tax bill, reducing taxable income. Some tax credits, like Earned Income Tax Credit or Child Tax Credit, can be refundable, allowing taxpayers to receive excess refunds if they exceed their tax liability. By utilizing available tax credits, taxpayers can significantly reduce or offset their tax obligations. 5. Itemized deductions. Itemizing deductions on tax returns allows taxpayers to list eligible expenses, such as mortgage interest, state and local taxes, medical expenses, and charitable donations, which can reduce taxable income and tax liability. This method, particularly for significant deductible expenses, can optimize tax savings and prevent overpaying, making it a valuable tax planning tool. 6. Shift income. Shifting income involves strategically timing income receipts to take advantage of different tax rates or brackets. This can be beneficial for individuals and businesses in lower tax brackets or expected decreases in tax rates. Aligning income recognition with periods of lower taxation reduces overall tax liability, ensuring taxpayers retain more money. 7. Tax-efficient investing. Tax-efficient investing involves structuring an investment portfolio to minimize tax liabilities. This can be achieved by choosing investments that generate capital gains or holding them long enough to qualify for lower rates. Investing in tax-advantaged accounts like Roth IRAs or 401(k)s allows tax-free growth or deferred taxation. Strategies like tax loss harvesting can further optimize portfolio tax efficiency. 8. Gift assets. Gifting assets such as stocks, real estate, or cash is a strategic method for managing wealth and tax liabilities. It allows individuals to transfer assets to family members or charities, reducing the size of their taxable estate and potentially keeping it below federal estate tax thresholds. Gifting appreciated assets also allows recipients to benefit from a stepped-up cost basis, potentially reducing capital gains taxes upon sale. 9. Start a business. Starting a business can provide numerous tax-saving opportunities, including deducting operating expenses, obtaining specific tax credits, structuring income in tax-efficient ways, and choosing a fiscal year-end with flexibility to carry forward or back losses. By strategically managing income and expenses, business ownership can lead to substantial tax savings, allowing entrepreneurs to reduce their taxable income and optimize their tax liabilities over time. 10. Move to a tax-friendly state. Relocating to a tax-friendly state can lead to significant tax savings for individuals and businesses. Some states offer no income tax and lower property, estate, or sales taxes, allowing residents to retain more income. Retirees can benefit from additional tax breaks on pension and Social Security income. Businesses can also benefit from reduced corporate tax rates or job creation incentives. Whew! That was a lot, right? If you found this video helpful, please give it a thumbs up, drop a comment below, and share it with your friends. And don't forget to hit that subscribe button. Now here's a question for you. Which of these tax-saving strategies are you excited to try? Let us know in the comments. And remember, always consult with a CPA before making any financial decisions. This video is for informational purposes only and not intended as financial advice.